Hello and welcome everyone to today's live commodity market analysis with the Gold and Silver Club for the 19th of January 2017. Led by myself, Phil Carr, and Silver Club. Today we will of course be covering live market analysis. We go through how we expect the markets to move, a watch list of trading opportunities, an overview of the commodity markets, and we'll also covering our top trades of the week as well. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, as international experts. Our analysis, opinions on the metals, the energies, and the agricultural markets. They are routinely major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, visit our website, which is www.thegoldandsilverclub.com. So what we'll have a look at before we go into the charts, we'll just give you a bit of a bigger picture view of how the markets are performing so far in 2017, what the top performers have been so far in the first 3 weeks of the year. So what you want to note so far is that palladium has been one of the strongest performing markets this year. It's up over 10% in 2017. Coffee certainly has also been a big hit, over just under 9%. Sugar has moved over 8%. In fact, sugar broke out again just today, is up just under 7%. Silver up 6.4%. Wheat up 5%. Cocoa up 5%. Gold up 4.5%. Copper 4%. So you get the picture. We've seen some big moves so far in the first 3 weeks of 2017. Also markets where we've seen a bit of a sell-off here, which you can take advantage of. Also the sell side have been WTI crude oil, Brent crude oil, natural gas as well. We'll definitely have a look at those markets. Now just a quick recap of what we discussed last week. Had a few great feedback off the back of last week's session, where we covered some of the major trading opportunities which are coming up this year. And as I mentioned last week, it is well worth knowing we've got a schedule for 2017. You want to be aware of some of the major news items that are scheduled, which are coming up this year, and big trading opportunities. Those are as follows. So of course, tomorrow we have Trump taking office. Trump will be speaking at 5 p.m. London time tomorrow. Certainly see some volatility in after that as well, and in the weeks subsequently after taking office too. So this is going to be fascinating to see how this plays out in the markets and trading opportunities which result. At the beginning of February, we have the FOMC statement of the year, and then as we go into March, we have the Dutch elections, we have an FOMC meeting again, and of course UK triggering Article 50 and Brexit beginning, which of course will be widely watched to see what impact that has on the markets. In April, we have the election, ECB meeting as well. We have the OPEC meeting in June, FOMC meeting, and again another ECB. Of course, we've had another ECB meeting today. And in July, we have Fed Chair Janet Yellen providing a semi-annual testimony. We have the German elections. In September, we have another FOMC meeting. The September, October, and November FOMC meetings, and also December, tend to be some of the high impact items of the year, the biggest FOMC statements. Certainly last December we saw, of course, the interest rate hike. That was the same back in 2015 as well. September we have an FOMC meeting. In October we have an FOMC meeting, and Fed Chair Janet Yellen is providing a semi-annual testimony, and then we have the final FOMC meeting, of course, in December. So with that, that just gives you a bit of a breakdown of an outline of the major trading opportunities over 2017. So short term, let's have a look at the markets and see how they are playing out this afternoon. Now, we did get a dip lower after in the price of gold here, which we'll have a look at. Gold, silver, we'll have a look at the US dollar, oil as well. We'll take a look at platinum and palladium too. So gold prices, we have seen a after we saw gold break out on Tuesday out to 7-week highs here. So we breached just up to 1,220 US ounce, just underneath that level on Tuesday. Subsequently, yesterday, we saw gold prices under pressure since the release of the Fed Beige Book, which highlighted growing optimism that supports the Fed's view of 3 rate hikes in 2017. So we've seen overall gold down as Fed's optimism in the US economy. Markets are also looking for clues today, of course, from Mario Draghi's speech. The current tapering on the table as well, and we're just coming off the back of actually Mario Draghi's speech now on the press conference. And as usual, if for those of you who follow the press conferences by Mario Draghi in the past and what sort of impact this has on the US dollar and also the price of gold, silver, and a number of other commodities, and the price of course the US dollar, which I'll just show you right now. The US dollar is rallying. Look at this conference. For those of you know this in terms of the impact it has on the precious metals, it is very to see off the back of the ECB press conferences the US dollar to get supported, and most notably gold and silver, both prior to that and on the actual day of the conference as well. We've been going over this during our live trading rooms during the week at the Gold and Silver Club, the potential to take profits here ahead of today's announcement and ahead of today's press conference. And you can see this is not unusual at all that we've got at the moment on gold currently trading just below 1,200 US dollars at 1,099. We have had what is known as a rail track formation yesterday into the close, which is a bearish candle, which is equivalent to the previous bullish candle, and you've got here the same amount of body, the same daily high and the daily low, and that often can be a bearish factor, especially if you break below the previous day's low. Then you can really start to see the momentum up to the downside. So at the moment it's trading at 11.99. Not really too surprised about that, given that we've 3 weeks of strong gains here on gold. It's had a really good rally so far as part of the January effect. We closed above the 50-day moving average on this week. We've continued to break out and surge higher here up to the monthly pivot, but I do think at the moment we are due a little bit of a short-term pullback here for gold. It has certainly seen a good run following on from the 29th of December. We saw essentially gold break out of this formation. It's continued to follow, and at this point in time the major levels, I've had a few questions on this, what major levels to have a look at the moment on gold in order to consider this as number one, the next major area of key support, although the major zones that gold needs to hold at the moment. So right now 1200 will be the first zone, which is where we're sitting at right now. So a close above or below this level will be important today. Most notably, a lot of traders will be looking on gold to see today whether we will close below yesterday's lows. So that will be a major point to look at in the markets today for gold. If we do get a close below yesterday's low, this short-term pullback could start to increase some momentum, and we may get a move all the way back down to the major monthly pivot here, 1,185 US dollars per ounce, which would also be a revisit of the 50-day moving average. So at the moment, the next key targets we're looking at for a pre-pullback would be the 1185 zone if gold closes below 1200 today. So it's been a good run. The January effect has played out as we've been anticipating, but at this point in time we expect a pullback here back potentially towards the 1185 zone. Now if we go over to the US dollar index, look at the momentum of this market at the moment, we can see where yesterday we produced a inside candle after we got a break and a close below the 50-day moving average earlier on this week on Tuesday, and we've already broken above Wednesday's high here, and you can see the overall momentum so far in favor of the moment. So the US dollar index is getting some momentum off the back of the ECB press conference today, also off the Fed comments just yesterday as well. So overall, the US dollar index is looking relatively steady as we go into the US session today. And I would look at that and the inverse correlations, which we're likely going to see on commodities. So if we move over also and have a look at silver, in fact, I'll show you platinum and palladium as well. Platinum, after breaking out over 8% so far in 2017, back down to the next level of previous resistance, which is turned into support around the 95.55 zone to 955 US dollars per ounce. You've got the 50-day moving average and the 21-day moving average just below at the 938 US dollars per ounce zone. That I would look at as the next major level where we could see previous resistance now turn into support. So that would be the next zone I would look at here for palladium to potentially get a bounce here short. So I'll be surprised to see a little bit more momentum to the downside, but then look at buying opportunities on a bounce that level. Now, typically for those of you who are familiar with the January effect, how this works, the sort of inflows that you see normally at the beginning of the year, the precious metals, it's never just a straight run up, and it's been an impressive move so far on gold, silver, palladium. Palladium, in fact, has been the best performer, up over 10% so far this year in 2017. We have a look at the overall price structure of palladium at the moment. This reversal pattern we formed at the end of we've had a big follow through breakout trade in the 1st of January, which led to a 10% move in just over a week and a half. We're consolidating at the moment, pulling back. I would suggest we've essentially got a flag formation in development here, and I wouldn't be surprised to see a little bit more channeling, possibly a further pullback down towards the 730 zone, but then support at this level. I would look for pullbacks still to be treated as buying opportunities, but only on confirmation. You don't want to catch a falling knife at the moment. We are getting pullback on a number of markets right now. In terms of selling those markets, should you be selling gold? Or should you be taking advantage of this move that we're seeing at the moment? Potentially, if we do get a close below yesterday's low today, see that quite clearly on my chart at the moment. The low yesterday was 1,202 US dollars per ounce. Currently, we're trading at 1199, so 1,199 US dollars. And yes, if we do close below yesterday's low, I would expect short-term momentum for a move back towards the 1185s. Those of you who trade intraday, take advantage of that for a short-term trade, and then just see how gold does get a move back down to the 1185 zone. And of course, the wild card being tomorrow, Trump and his speech, and Trump taking office, which of course will be looked at over the weeks to come here as well, and the sort of impact that has on the markets. But short-term momentum is to the downside on the metals. Now, also another market which you definitely want to just have on your radar right now is oil. We do have the oil inventories coming up today, which is going to be in the next 1 hours. So at 4 o'clock time, we have broken below a key level of support here on oil, which was 53 US dollars per ounce. Per barrel, excuse me. What was important about this close was the fact that we have not only broken below support, but we've also closed below it, and we've had a very decisive close here too. Also been looking at the weekly chart for oil, and we've been rolling over, forming a V-shaped reversal pattern. I certainly see the potential for oil to come down lower in the short term. We have got sell short positions on this market. You can draw in very clear overhead major trend channels just on the weekly chart, where we've just seen the price between these levels. At the moment, short term, I'm looking for a move back down to the 50-day moving average, which sits at $50.07 per barrel. So from where we are at the moment, it's about a $1 move from the current price. So a move from 52.50 down to approximately 50.75 is what I'm looking at in the short term. Beyond that, if we see oil continue to break down, and if we do the move to the downside, I would look at 50 as the next major zone. Previous resistance turn support short here. Our sell short is currently in profit. We are going to keep an eye on the oil inventories coming out this afternoon. The fact that we've had failed breakouts today, I would say bodes well for the sellers in this market, and the overall technical control right now is in favor of the sellers. What we saw at the beginning of January was this breakout to the upside. So oil broke above the 18-month highs, and we saw essentially a bull trap quickly after that breach 18-month highs, which would have triggered traders into position here with a break of major levels of resistance above 55 US dollars per barrel. Very quickly, we saw oil sell off over 300 points, produce a bull trap. So a bull trap is when you essentially see buyers get trapped into a trade. They've been triggered in at the highs. The market just completely reverses. And then because it's reversing so quickly, a lot of the traders who've got in at a higher price are being just punished for their late entry market. And with that, you see sell-off as traders are getting stopped out of their position, and that exacerbates where you get a very quick, fast bull trap, and that produces a large candle on the daily chart, which often is a bearish engulfing candle. exactly what you've got here. We had a retracement back towards the upper end of the trend channel. Oil has really failed to close above 55 US dollars per barrel so far this year. And you can see lower highs, lower lows. We're just ricocheting between support and resistance. There are some larger channels on the weekly chart as well, and also on the daily chart. We have movements back towards resistance. Another one on Tuesday, we broke out above the last 3 days worth of consolidation. See an inverse hammer produced into the close that has been breached to the downside. So far, limited momentum so far today, but I am looking for lower prices. So just for those of you who trade oil right now, we're looking for a continued move, and ultimately in the short term, I'm looking for a retest of the 50-day moving average and the monthly pivot, which sits at 50.75. And then, of course, we'll continue to assess the price structure. Not necessarily saying we're going to significantly lower than that. At this point, short term, those are the levels that we're looking for to target, and then less if we do come down to that zone, how the price structure is looking for a revisit of that level. Another market which I think is worth just bearing in mind and on radar right now is going to be sugar. So we've seen sugar actually break out of important technical structure. Sugar has been one of the best performing markets so far in 2017. It corrected right into the end of December, and we've seen quite a significant rally at the beginning. It's up approximately 1% so far in 2017. It consolidated for a week and a half, did the gains with support above the 50-day moving average, and now we're seeing another break to the upside. We broke above a pennant, broke above a consolidation. And what you want to bear in mind, for those of you who trade sugar, I'm aware less of you trade sugar than perhaps you trade gold or silver or oil, but if you do trade sugar or you're looking for alternative trading opportunities, keep this in mind, because the last time we broke above the 21 level was in just over about 10 days. We broke to 4-year highs from 21 all the way up to the 24 zone, and at time we saw sugar breaking out to 4-year highs, and it had moved over 40% to the upside over 2017 before it has had this making it down to the lows in December. So I am looking at entries here on sugar. It's currently trading at 21.29. It's held up most of the gains here. We've seen a few commodities pull back after yesterday's Fed comments, and also following on from the European Central Bank press conference. We've seen a number of commodities, including platinum and palladium, selling off the back of a strong dollar, but sugar hasn't, maintaining this overall upward trend. Another market that we've capitalized on so far in 2017 has been coffee, which has been a good move. We've taken this whole V-shaped reversal breakout to the upside. We still maintain coffee positions, although I think it is struggling a bit with overhead resistance at the moment. It's running out of steam. It will probably pause here before its next move higher, or it could get a retrace back towards the 145 zone. But so far, our trade on coffee has moved well throughout 2017. Also, for those of you who've been asking just regarding gold trade manifest, yes, we've been in this position since inception, since the trend change going back to the end of December. The 29th of December is where we got into this position on a break of 1,146 US dollars per ounce. We still maintain long positions in gold at the moment. We've taken profits throughout this whole surge in prices, especially earlier on this week as well, when we've seen a breakout up towards the monthly pivot, and also it's an important Fibonacci level on higher time around the 1220 zone. That has been the major level here. So we've had a rally all $1,218.89 here was the high so far on gold throughout this year. We have taken partial profit as we've been profiting over 700 points on this move from the breakout from the lows to the highs here, where we've entered into the trade. But I am mindful that short term, I wouldn't be surprised to see a bit more of a corrective pullback. For those of you who perhaps you've got on gold right now, and both opportunities to get in, and also signs that you should perhaps profit off the table, not wanting to give too much of your gains back. What you want to look at today, which I'm sure a lot of you are aware of anyway, is probably just a reminder, but just in case, if we do get a close below yesterday's low, today, that is a very clear sign that you want to consider taking some profits off the table here for gold. That is usually what gold does when it corrects, when it starts to pull back. Now, it might be a limited correction. If you go back to previous years during the memory, usually corrections on gold are limited between 3 to 5 days before they start to pick up momentum. Again, we have broken out some significant levels here on gold so far on the monthly, on the weekly chart as We've got a lot of uncertainty around Donald Trump coming into office tomorrow, so we could see again some volatility on that. I'm sure in the weeks to come we'll have more volatility, but short term you can see we're seeing profit taking at the moment for gold, and we might just well get a revisit of the 50 MA again, a bounce around this level, consolidate for a while. Does need to consolidate some of the gain. If you look at the low to the high so far, so if you look at the low that we put in the step, which is taking gold down to 1,122 US dollars, the high here at 1,218, it's just under 1,000 that gold has done now in over about 3 weeks, which is quite reasonable. If you look at previous years over the month of January, typically gold does anywhere between 900 points to 1,800 points from low to high over January. So we're certainly within the context of historical gold. We are the normal remit of what you would expect gold to rally before it gets some sort of corrective move here. Okay, so just to make you aware of that as well. Also, I'll just move over to, we've covered silver as well, just to give you a bit of a heads up on silver too. Silver managed to get a break and a surge above the 50 MA earlier on this week. We saw additional follow through yesterday, a spike high, and then of course we've seen a rejection candle into the close. That's followed through so far today, so not really too surprised about that at all here. So I'll continue to watch the overall price trend. Overall, gold has been the better trade in 2017 than silver, and also been the better of the metals here to take advantage of the V-shaped reversal pattern and big inflow that we've seen into far this year. Also be mindful, if you do trade silver, if you trade the precious metals, you can very clearly put these overhead trend channels on your chart. You will note that we just come for a natural move back towards the upper end of this zone from the lows that we produced at the end of December. Here we've had a rotation back towards resistance, so it's no surprise to get some profit taking. Again, silver now, should you be looking now to reverse position? I would say if we were to breach back below 1650 and we really start to see momentum pick up with the US dollar index to the upside, if it gets a confirmed break back above the 50 average and starts to break out of this recent pullback in prices, you've got essentially the potential also on the US dollar index for a bull flag formation, where if we were to breach above the resistance zone over the course of today and tomorrow, if we get a breakout, and we really don't know in terms of price action how US dollar going to respond to Trump coming into office and his speech as well. So we've seen just the moves in the market. Of course, if we go back to the speech that Donald Trump gave after the US election, where he won the election, he had a very calming influence markets. With that, we saw a sell-off on gold, we saw a rally in equities, and that was the really the spike high for gold, and then it subsequently broke down over 2,000 points following on from that. More recently, for those of you I'm sure who followed Donald Trump's press conference last week, that caused a lot of volatility. It caused gold broke out points after the press conference, and with that also the potential for volatility as well. So there's been a lot of speculation that that could just be the start of what to expect really moving forward. Speeches and also press conferences, there was quite a lot of volatility off the back of that, and it was certainly very much a change in sentiment to what we saw from Donald Trump after he won the US election, where he was very graceful in the speech that he gave. He was quite different in temperament last week. So we're watching that very eagerly for trading opportunities. What I've got no doubt of is that there will be some great opportunities over the course of this quarter, over this year. It's been an amazing year so far in 2007. A lot of you have caught the moves that we've had right up until this point at the moment, particularly on the metals, which have been the best performing market so far this year: platinum, palladium, gold, silver, also coffee, sugar. We've seen some really strong moves. So now it's time to take possibly a little bit of a breather in the markets today and yesterday as well. Make managing to bank some profits along the way here, make that you are just making sure that you're able to at least capitalize on these moves, profits, and get ready for the next trading opportunities which are going to result over the next few days here. So with that said, I will move over to our top trades that we've taken over the last week and a half here at the Gold and Silver Club. I also get a lot of questions off the back of these sessions, how you can join the Gold and Silver Club, become a member, access to all of our trades, the full line of the positions that we are taking, access to all of our services, including trading room, including the private members academy that we have at the Gold and Silver Club with all of our online resources, our research, and you can get access to all of very simply by making an application to the Gold and Silver Club, which I'll go through with you very shortly. So just before I do so, this is our portfolio performance, trading performance using our exclusive research-driven strategies. So first of all, we've capitalized on the January effect move on gold here, reaching 100 points profit just earlier on this evening, taking partial profits. Once we've come up to that level, we've still got some existing running because we are in at 1146. So we've got in at a really tight entry here where we can afford a little bit of wiggle room here for gold in order for to potentially pull back but then go higher again. But so far we've managed to capitalize on over 700 points profit. WTI crude oil, we got into a sell short last week. We caught a 250 point move. We're back short again with oil. That trade at the moment is approximately about 50, giving it some room here, so it hasn't quite hit our targets yet. We've only just got into the trade just yesterday. We've had a confirmed break below an important level of support, so we've got a new trade running on WTI crude oil at the moment. Palladium, of course, as well, this breakout V-shaped reversal pattern, and also the consolidation that we'd seen over the month of December. This has been one of the best performing markets over this year, capitalizing with a 750 point gain, which we gained very quickly within the first week and a half of January. So again, if you would like highly profitable live trade shared with you, ready to implement for instant results, all you need to do is www.jointhegoldandsilverclub.com. Also, when you make an application, please do make sure that you specify that you have FX Street or you're watching the recording. We've got a special offer on for all of the clients of FX Street, all the attendees who come onto the FX Street, the webinars. So when you do make an application, please specify, in order to get the bonus and the preferential rate at the Gold and Silver Club, make sure that you specify that you on the FX Street session. We get a lot of applications at the Gold and Silver Club, and unless you specify that, then you'll get full price of your offerings to join the Gold and Silver Club. But if you specify that you've been on FX Street, you're watching this recording, could be on YouTube or could be on the overall site, or you're watching it live right now, please just specify that in your application. Who's it for? Why should you join? What do you get? Okay, so let me cover these questions for you. So whether you're a new trader, you just want to develop a solid understanding of the markets, fast track your results. So if you really want to get going with commodities, we take you really from all the way through to getting to grips with the commodity market. Execute trades being set up with everything from your charts to all of the analysis. We provide all the same entry, exit, whole life cycle. We provide, we're very transparent about the trades that we're taking that you can see on a daily basis. Also, it's for experienced traders. You might be that you're experienced with the Forex market, the equities market, or it might be that you've got some experience trading gold, oil, other commodities, but you've just not been consistent and you want to more consistency. So in the private members live trading room is also definitely for you. Include essentially private members get access to live trading room webinars, so you can watch our expert traders analyze the commodity markets right in. We go through highly profitable trade setups. We share exact entry, exit points, take profit levels. We go through live trade ideas ready to implement. We provide email and SMS notifications. So essentially we alert you every time there's a new trade set up. You get the notifications real time, provide you with the exact levels we're getting in, entry, take profit, stop, and also you get trade management on those. We update what we are doing in the market, so you can get that step by step, and you get commodity research and market insights, so you get exclusive access to trading research and market insights to help boost your win rate and ensure you're getting on the right side of trades. Our research is there really to give you the ultimate edge in the markets and fast track your results. So again, the private members live trading room includes exclusive weekly live trading room webinars. You get live ready to implement real notifications via email and SMS, so you don't miss out on profitable trades. Details of where to enter, exit, place to stop, a weekly trading plan with a watch list of trade ideas for the week ahead. You get live support to help you through each trade, and level trading research and commodity insights to give you the ultimate edge in the markets. So again, to exclusive access to our private members live trading room, all you need to do is go to www.jointhegoldandsilverclub.com, complete the application form. We will get in touch with you ASAP. And do make sure you specify that you be on the FX Street webinar, watching recording on the main site in order to the essential rate for those of you who are watching this via FX Street. Okay, fantastic. So with that, all good trading, good tomorrow, guys, for Donald Trump coming into office should be interesting in terms of the impact that has on the markets and the subsequent week. Profitable trading, and of course we'll see you all on the next one, and I very much look forward to welcoming those of you who will be making an application and joining us at the Gold and Silver Clubs. All the best, and we'll speak real soon. Thanks everyone. Bye bye.